Now we will discuss about the statement of cash flows. So statement of cash flows is a required financial statement. Like the for-profit organizations, all not-for-profit organizations must need to prepare this statement of cash flows. And when they're gonna prepare this statement of cash flow, they will classify all of their activities into three categories. We all know that the main objective of this statement is to show the cash availability and to show all of their cash receipts and cash payments. So when a not-for-profit organization will prepare the statement of cash flow, they will classify all of their activities into three categories. Number one is the operating activities, number two, investing activities, number three, financing activities. Like the for-profit organizations, not-for-profit organization will also include all of their cash receipts and cash payments that are related to their core operations. That will be under the operating activity parts. But you have to also remember that if they receive any proceeds or any contribution from a donor and there is no restrictions, that will be also a part of the operating activities. That means any proceeds or any unrestricted contributions, any cash received without donor restrictions will be under the operating part. Now, here let's talk about the operating part a little detailed. Sometimes you know that the organization can receive a fund without donor restrictions, and they used to call it unrestricted portion. Now they call it without donor restrictions. But sometimes the internal governing body or the board can impose restrictions on that fund. That means they can keep those funds to purchase some long-term assets. Although those are saved to purchase long-term assets, but those restrictions are imposed by internal body, so we will not consider those as an investing activities. Rather, we will consider those an operating activities. That means when you receive any contribution as unrestricted or without donor restrictions, and even the internal body or board can impose restrictions, still we will consider those under the operating part. Now let's see the investing activities. So investing activities basically include when you spend money to purchase an equipment, or if you sell any type of your assets. So it could be any type of your cash proceeds by selling any assets, or you can also receive cash by selling any type of artwork. And sometimes you may receive cash by selling any assets, and those cash could be restricted to invest in equipment or another activities. So any type of proceeds by selling any artworks or assets, or any type of payment to invest in equipment will be under the investing activities part. Now let's talk about the financing activities. So you know, just like the for-profit organizations, financing activities should include basically those activities that helps to finance your corporations, to raise your fund. For example, if you want to borrow from a bank, or if you want to pay your loan, those should be under the financing activities. So basically here for our for-profit organizations, you have to remember that you can classify their financing activities into two categories. One category is just like the regular type of financing activities, just the payment or borrow or any type of activities that helps you to finance the organization. Another is that if you receive any contribution with donor restrictions, or any contribution with previously we could classify those as temporarily restricted or permanently restricted. So any type of proceeds from your donors that comes with some restrictions will be considered under the financing activity parts. So as a summary, remember that not-for-profit organizations will prepare the statement of cash flows, and they will show all of their operational activities, and that usually will reflect the changes in their current assets and liabilities. But you have to remember, if you receive any contribution without restrictions, which we used to call unrestricted net assets or unrestricted contribution, that will be under the operating part. And investing is basically the sale of any type of assets or any art, any type of cash receipts, that is also restricted to invest in an equipment, or if you invest in an equipment, that will be under the investing part. And the third category is the financing, which usually includes all financing type of activities. And you have to remember, if you receive any contribution with donor restrictions or temporarily restricted or a permanently restricted contribution, that will be under the financing part. Now let's talk about our fourth financial statement, and that statement is called the statement of functional expenses. So you can think of all of the expenses for a not-for-profit organizations, and this is actually not required for all not-for-profit organizations, but SSC asked to prepare it for, especially for the voluntary healthcare organization and welfare organization, because their expense patterns are really complex. So we actually learned a little bit in our previous discussions. When they're gonna show these details of their expenses, they will classify those into two categories. One is called the program service expenses. Those are directly related to the organization's main mission. And the second category is the support service expenses. So basically those type of activities, those type of expenses are not related to the mission, but it actually supports the organization. For example, any type of expense that occurred because of fundraising activities, or any type of general administrative expenses, or any amount of expense that is basically incurred for membership development. So basically not-for-profit organization can prepare it, but voluntary health and welfare organizations are asked to prepare this statement to show their detailed expenses, and they will classify it into two categories: program service and support service. Remember, program service is related to the mission of the organization. On the other hand, support service is not related to the mission, but those are other activities or expenses that support the mission. Now let's do a quick concept check. So here is one CPA sample question that relates to the statement of cash flow of a not-for-profit organization. The Jackson Foundation, a not-for-profit organization, received contributions in year 1 as follows: cash contribution of $500,000 without donor restrictions, cash contribution of $200,000 with donor restrictions, with specific requirements received to the acquisition of property. So it used to be classified as a temporary restricted, but now we will call it with donor restrictions. So they received two types of cash, and both are donations from the donors. One is without restrictions and another is with restrictions. Although this cash is restricted to purchase a property, so it apparently seems like they are going to invest in long-term assets. But if you remember the basic concept, which was that if they receive any cash contribution from a donor without restrictions, we classify it under the operating activities. And any type of cash proceeds with donor restrictions, it could be temporary restrictions or permanent restrictions, that will be under the financing activity parts. That means here Jackson's statement of cash flows in year 1 should include which of the following amounts. So basically, because of this unrestricted portion, they will include these 500,000 under the operating part, and because of these donor restrictions, they will consider that 200,000 under the financing activity part. So the correct answer is C.